Well, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita, Khemka. And of course, the GIFT Nifty this morning hinting at record highs for our markets. The implied open was suggesting a 300 to 350 point kind of a gap up. If that happens, we could be closer to that 26,277 mark, which happens to be the all-time high for the Nifty. We'll have to see whether or not we manage to, surpass that level as well or not. Of course, lots, aiding sentiment. The bulls, of course, picked up traction right at the, at the right time, so to say, 2 weeks prior to Diwali. And of course, we've seen the kind of fireworks that, took place on Dalal Street in the last 5-6 sessions. We've seen the Nifty, getting past the 25,900 mark as well. So let's see whether or not we can, clock that record high level of 26,277 anytime soon or not. In the pre-open, things are looking good. It's kind of a 120 point kind of a gap up in the pre-open above that 26,000 level. But 350, 400 point kind of gap up being hinted by GIFT Nifty. We'll of course be watching out for that crucial level of 26,277. All eyes on that. And of course, we also have a cricket match that's on. So all eyes will also be on the duo Virat Kohli and Rohit Sharma. We'll see whether or not even they can pick up steam, just like the bulls, picked up steam at the right time. So yes, all eyes on 26,277 and a comeback by Virat Kohli in today's match in Adelaide, which also happens to be his, favorite ground, so to say, where he has, of course, performed really well in the past. But lots to watch out for over the next 1 hour on Opening Bell. We'll, of course, be counting down to 9:15 when the markets open. We'll take stock of all the stocks that will be in focus today, the likes of HUL, BEL, IT stocks, of course, after that H1B reprieve, by the Trump administration. So IT, of course, will be a pocket that will be in focus. All your stock-related queries will also be in focus. Keep them coming in on a live feed. We will try and get them addressed as well. So yes, before all that, let's quickly take a look at the top stories at this hour. US President Donald Trump dials Prime Minister Modi on the occasion of Diwali and discusses trade and efforts to end the Russia-Ukraine war. Reports claim PM Modi committed to cutting back on the purchase of Russian oil. Sources say both sides have had positive negotiations on a proposed trade deal. Wall Street ends lower on the back of new US-China trade tensions. Dow slips more than 300 points. Nasdaq sheds more than 210 points. Reports suggest that the Trump administration is considering a plan to curb an array of software-powered exports to China, from laptops to jet engines, to retaliate against Beijing's latest round of rare earth export restrictions. Asian markets mirror Wall Street losses, largely open in the red on US-China trade concerns. The GIFT Nifty, however, is indicating a big gap up start, hinting at a retest of record highs for the Indian market. And crude oil prices extend gains after the US imposes new Ukraine-related sanctions on Russia, targeting oil companies like Rosneft and Lukoil. Gold prices meanwhile slip as investors book profits after a week-long rally ahead of key US inflation data due later this week. The yellow metal is now off over 6% from record highs. And in key earnings today, FMCG major Hindustan Unilever will report its September quarter numbers. The company's profit and margin are expected to take a hit amid GST transition and weak demand, while revenue may see a slight uptick. All right, recapping trade for you then. In the Muhurat session, we saw the Nifty ending flat but with a positive bias. The Nifty Sensex, in fact, are perched at one-year highs. For an 8th straight Muhurat session, we saw both the Nifty and Sensex ending in the green. We did see lower volumes, although it was a 1 hour long trade, and of course volumes were thin given the fact that it was of course Diwali. The Nifty did end above that 25,850 mark. The Nifty Bank Index, however, ended the day in the red, but mind you, it ended above that 58,000 mark as well. And of course, Nifty Bank Index hit a record high earlier this week as well. Aside of that, if you look at the top gainers, Cipla was among them. Kotak, Mahindra Bank, Asian Paints, Ultratech were among the losers. On the mid-cap end, you had the likes of Nuvama, Suzlon, Inox Wind, Indus Stars. These were among the top mid-cap gainers. but Muthoot Finance slipped as precious metals or precious metal prices turned volatile. Aside of that, if you look at the option queues, the Nifty put call ratio declined to 1.08 vis-a-vis 1.15 in the previous session. In the F&O band, you have only one stock today, and that continues to remain in F&O band from the previous session. That's Samman Capital. And in terms of fund flows, foreign investors net bought shares worth 790 crore rupees in the cash market on a provisional basis. Domestic, institutional investors continue to buy, stocks, and of course they pumped in as much as 2,500 crore rupees in the cash market. FI selling, of course, has abated in recent times. No big buying, but sell-off for sure has abated with cash buying emerging, and of course short covering in the futures market as well. But on that note, let me bring on board Chandan Taparia, who's Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely chatting with you this morning. GIFT Nifty hinting at a big gap up. In the pre-open, we are seeing 26,000 on the screen. But what are the chances that we surpass that 26,277 level and hit a fresh high today itself? What are the charts telling you?
Good morning, Nandita. Thanks for having me. Wishing you, entire team and all the viewers a very happy Diwali. And I think real stock market ki Diwali to aaj hi hai, when indices are all set to hit the new lifetime high. So I believe this momentum could continue. As of now, the way market has been making a high top, high bottom, there is high chances for the indices to hit the new lifetime high. So I believe till it holds about 25,750, index has potential to head towards 26,277 and beyond that. So I think bullish stance could continue in the Indian market going forward.
All right, bullish momentum could continue in the Indian market. Chandan, wish you a very happy Diwali and of course a very profitable Samvat going forward. A happy New Year as well. But the Nifty Bank Index already made a new high. What are the next levels to watch out for? It did cling on to that 58,000 mark, even though it ended in the red in the Muhurat session. Here on, you expect the up move to continue, and which or what are the levels to watch out for on the upside here on?
So Bank Nifty recently made the new lifetime high at 58,261. However, on the last trading session on the Muhurat day, it remained consolidative. But as of now, till it holds above 57,500 marks, the ongoing momentum could continue. Major trend of the banking index is positive, and this index has been outperforming the broader market. Already we have seen a decent run up of more than 4,000 points in last almost 15 days, and I believe the ongoing momentum could continue, led by short covering from the FIs. In fact, the FIs long short ratio is also recovering, and DIs are continuously buying, and the positive cues and positive sentiment from the US President Trump could give the more momentum in the short covering to the banking index, which has been outperforming. So I believe 57,500 could act as a major support, and this time Bank Nifty has potential to change the number marks to 60,000 and beyond.
Okay, those are the levels to watch out for. We'll talk about IT as well. But since I was looking at our feed, I could see a couple of queries from the banking lot itself. So let's get them addressed here. Naveen wants to know your thoughts on fresh entry levels for HDFC Bank. Numbers were good. The stock did see good traction as well post numbers. So here, is it an opportune time to make a fresh entry in HDFC Bank? And secondly, Sita Ramulu wants to know your thoughts on Federal Bank. Here as well, I think numbers were fairly good and the stock as well reacted to it. Just want to see where the stock price is at. It's at 227.5. Close to 52-week highs as well, just about a buck or two away from 52-week highs. Thoughts on Federal Bank as well? What are the next levels to watch out for on this counter?
So to reply on HDFC Bank and Federal Bank, so first let me talk about HDFC Bank. This stock is really doing well. This counter is up by almost 13-14% in this year, and overall it has been continuously moving upwards from last 12 consecutive years. I mean, from last 12 years, every time it remained positive. So I believe ongoing momentum could continue. The stock was all set to give a fresh breakout. As of now, the lifetime high zone is near 1,020, and stock made the same on the last trading session. So I believe the ongoing bullish stance could continue. With the support of 975, HDFC Bank has potential to rally towards 1,040, 1,050 kind of level. Federal Bank also looks positive, already rallied well in last month. making a high top, high bottom on the weekly and the daily chart, given a fresh breakout, enter into the lifetime high territory. So with support of 220, it can head towards 245, 250 and beyond. So most of the private banks looks positive apart from HDFC Bank. I believe Federal Bank has potential to outperform the market and rally by 10 to 15% from current level on the short term point of view.
All right, room to rally further and take note of the levels that Chandan just mentioned. So hope that addresses your queries on HDFC Bank and Federal Bank. But let's shift focus to IT stocks. Just about 3 minutes left for the markets to open, and all eyes will be on 26,277. Whether we can come close to that, surpass that, whether we see such a big pop at open or not, we'll discover in just a matter of a couple of seconds. But talk about IT as well. In a further relaxation of its rules relating to the new $100,000 fee on H1B US visas, the government has said that the fee will not apply. The US government has said that the fee will not apply to applications for a change of status or an extension of the stay in the US. In fact, US President Donald Trump had on 19 September signed a proclamation imposing a $100,000 fee on H1B visas. Now, hours later, his government clarified that the new fee would only apply to new applications and would be one time. Now, guidelines issued by the US Citizenship and Immigration Services Department on Monday reiterated this, saying that the proclamation does not apply to any previously issued and currently valid H1B visas. Now, US further has relaxed $100,000 H1B visa fee norms. So yes, because of this, the entire IT pack will be in focus. In fact, in the pre-open, I can see the likes of Infosys, HCL Tech, TCS, Wipro, all of them, among the top gainers on the Nifty. Of course, this is in the pre-open session, but IT will hog the limelight in today's session. The IT stocks, of course, did see, some bit of sell-off even post earnings, but whether or not we see a good pop on some of these IT names is something that we'll watch out for, going forward. But, in terms of a trading play, how are you looking at the likes of Infosys vis-a-vis HCL Tech? Even in terms of the buyback news, the Infosys buyback, we have news flow that the promoters, will not be participating in the buyback. So that's another reason why Infosys will be in focus as well. How are you looking at some of these large cap names?
Yeah, so I believe the soft comment from from viewers is somehow changing the sentiment of the Indian market overnight, and I believe this is somehow supporting the Nifty IT index as well. So as of now, I believe the momentum and short covering could be there. However, this sector was slightly underperforming, but can see positive momentum. Looking at the Infosys, I believe the stock has formed the multiple bottom near 1450. Now it can head towards 1520 kind of level. Talking about HCL Tech, some positive setup is visible in the counter after the consolidation move of last 6 days. I believe with support of 1450, it can head towards 1550 kind of levels.
All right, that's about technology stocks, but let's shift gears and see what the market is doing at the open. First ticks coming in, and yes, it is a triple digit move. We are back above that 26,000 level. 160 point or 170 point higher on the Nifty. On the Sensex as well, it's a 540 point up move, 84,999. In fact, we're just about knocking at that 85,000 level as we speak. Mid cap index underperforming at the current juncture, nevertheless up 0.3%. Advanced decline ratio or the breadth of the market is extremely positive, very strong, 4:1. That's the NSE advanced decline ratio as we speak. 1557 advances to 384 declines on the NSE. Early days to really, say that the breadth will be that strong, but we'll wait for it to settle down. But nevertheless, very, very strong in terms of market breadth. Bank Nifty resuming its up move after that one-day break in the Muhurat session. A 200-point up move on the Nifty Bank Index, 58,244. Just want to see if the Nifty Bank Index has in fact hit a fresh record high or not at open. 58,381. That was the record high which the Nifty Bank Index hit in today's session itself. But aside of that, let's take a look at some of the other sectors then. What is the picture really looking like? Want to see what the IT pack is doing. It's up 2%. Of course, the H1B visa, easing off for the H1B visa curbs. That has lifted the IT pack, 2% uptick on the Nifty IT pack. All the other sectors as well trading in the green. Metals up 0.5%, PSU Bank Index extending its gaining streak. You have FMCG as well, up 0.3%. Remember, HUL reports numbers today, so that will be in focus, although margins and profit are expected to take a dip. So watch out for HUL today in trade. Autos also in the green. You have real estate also up 0.2%, and so is the pharma basket. Let's take stock of the individual movers then. You have Infosys, that's up 3%, HCL Tech up 2%, Tech Mahindra up 1.5%, TCS as well up 1.5%. So it's the technology pack that's leading from the front this morning. You have Shriram Finance, Bajaj Finance also upbeat, 1.5% gains on each of these counters. You have Tata Motors as well, record festive sales for Tata Motors. That stock is up 1.5%, zooming away. You also have the likes of Asian Paints, Titan. Titan, I think, has got an upgrade from brokerage, so it's reacting to that, up 0.8%. Axis Bank, Kotak Mahindra Bank, so all these private banking names also gaining traction. On the flip side, what's not doing all that well is Interglobe Aviation. That's the top Nifty laggard, down 1% or so. Some of these two-wheeler makers are not doing all that well today. The likes of Eicher Motors, Bajaj Auto are trading in the red. You have Maruti Suzuki as well, that's out of favor. 0.3% kind of a loss there. Cipla, Dr. Reddy's, some of these Sun Pharma as well. Some of these pharma names, getting some kind of a headache in trade, in early trade, so to say. Looking at the open, Chandan, let's first get in your recommendations for viewers. It is a strong start. We have cleared that 26,000 mark. Still 200 odd points away from record levels. But what would you recommend, either on the long side or the short side here on?
Continuously making high tops, high bottom on the daily and the weekly chart, and the trend is positive. Just a couple of days back, it gave a breakout about 25,500, and I think ongoing bullish stance could continue going forward. So as of now, till it holds about 25,800, index has potential to head towards the lifetime high of 26,277. Looking at the Bank Nifty, here also it made the new lifetime high at 58,266 and beyond, and momentum seems quite bullish as of now, headed towards 58,380 kind of level. So till it holds above 57,750, Bank Nifty has potential to rally towards 58,500 and higher levels. Now, to discuss about the individual name, first trade is going to be the buy on Cummins, one of the strongest counter in terms of the price pattern, has given a consolidation breakout on the daily chart with a decisive hold above 4,000. So with support of 39.50, one can buy Cummins for an upside target towards 41.20 kind of level. Selective IT counter could be on radar. Persistent system is one of the strongest counter, which has already seen the strong momentum. In fact, on the daily chart, it has given a breakout from a bullish pole and flag pattern. So with support of 5800, one can look for an upside target towards 6100 kind of level. So Cummins and persistent system could be the two preferred name in the morning tick, looking at the current market scenario and expecting market to hold at higher levels and Cummins or step towards the new lifetime high soon.
All right, those mid-cap IT names, among the recommendations coming in from Chandan, likes of Persistent and Cummins India. Let's talk about a pharma name then, Dr. Reddy's. The stock recently cleared its 200-day moving average level on the upside, right? So today, of course, seems to be a down day for some of these pharma names. There's been some news flow with respect to Dr. Reddy's as well. The US FDA has classified its inspection outcome as voluntary action indicated for Andhra unit. The US FDA, of course, has concluded the inspection as officially closed. The stock is down though today, but as I mentioned, recently cleared that 200-day moving average level. In the last 5 sessions, the stock has done well, 4% kind of gains or so. At these levels, would you recommend looking at it? And what kind of an upside would you expect here on over the next 2 to 3 weeks?
Yeah, so talking about pharma name, in fact, when I talk about Dr. Reddy, recently it made the bottom near 1200, 1230 kind of level, witnessed some recovery, but momentum is missing at higher levels. It opened higher but fell to hold beyond 1300, drifted lower. Earlier it was finding hurdle at 1265, now hurdle is shifting higher. So I believe 1260 could act as an immediate level. However, it would be tough because it started to witness selling pressure in the morning tick. But as of now, 1260, 1265 could provide some support to form the base in the counter.
Okay, that's the level 1260. That's where it could find support. Talk about some of the defense names, particularly Bharat Electronics. It has received an over 630 crore rupee order from Cochin Shipyard. The stock has been in a steady uptrend. If you look at the last 1 month chart, in fact, I think last 2 to 3 weeks, the stock has seen very good traction. Since October 14th, the stock is up 5% or so. Some of these names, would they feature on your buy list now? BEL, HAL, lot of order wins, and of course, the stocks have been picking up traction as well. Would you, suggest an entry point at the current levels for the likes of a BEL?
Yeah, so BEL is our preferred pick. In fact, we have added this counter in our top Diwali pick. The stock has really done well in last 4-5 years, had been making higher top, higher bottom. In fact, rallied by more than 43% YTD basis and rallied well from mere 19-20 rupees to 430 in last 5 to 6 years. Major trend is positive. A small follow-up could lead to the fresh leg of rally. So, on immediate point of view, with support of 405, it can head towards 444, 450 kind of level. So, bullish stance in the defense, and PL is one of the preferred name in the entire defense basket.
All right. That's about the defense pack, but let's shift focus to the FMCG basket as well. Given the fact that Hindustan Unilever will be reporting its numbers today, according to the poll, of course, profit may dip over 6.5% on a year-on-year basis. Net sales are expected to increase by almost 2%, but EBITDA and EBITDA margin are likely to take a hit. Of course, some postponement of buying in anticipation of the GST changes, because of which second quarter was anyway supposed to be a little, weakish for some of these companies. But on the charts, how are you looking at an HUL, and what is the positioning like ahead of the numbers? No great fireworks as such. In the last 1 month, it's up somewhere around 4% or so. But ahead of the numbers, what is your positioning, and how would you play it going forward as well?
So setup is now positive. In fact, the stock was underperforming in the last month, but recovered well in last 4 to 5 days by forming the bottom near 2500. In fact, the trend is shifting upwards on the daily and the weekly chart with the formation of higher top, higher bottom. However, it failed to cheer the festive mood at the beginning of the Diwali festivity, but now it seems the momentum could be there ahead of the result season. So one can buy for an upside target towards 2800. 2580 could act as an immediate support. So some positive to range bound bias could be seen in the counter like HUL.
All right, that's the view then. But let's shift focus to the auto pack as well, given the fact that we had, the sales figures for Tata Motors in this festive period between Dussehra and Diwali. And it has been, a very, high charged one for Tata Motors. It has delivered over 1 lakh cars and SUVs between Navratri and Diwali. In fact, it has achieved its highest ever monthly passenger vehicle sales, marking a 33% growth versus the same period last year. Tata Nexon continued to be a star performer for the automaker. Of course, it's recently had a demerger with its CV division as well. That of course will be listing at a later date, but post the demerger, what's your view on Tata Motors? Do you think the worst in terms of the chart movement is behind for the likes of a Tata Motors?
So first of all, I want to comment on the Nifty Auto. We have positive view on the Nifty Auto segment. In fact, the GST boost, demand and innovation and consumption, all things are supporting the demand in this segment. In fact, we have seen a outperformance in the entire last couple of quarter. Stock is up by sector is up by around 20%, and I believe most of the counter, including Hero Moto, Mahindra and Mahindra, Eicher Motor could do well. Now talking about Tata Motors, the problem is the stock remains highly volatile. However, the major trend is buy on decline. If I look at the recent last couple of weeks, stock has seen a corrective move from 448 to 376. But now again, it has been making a high tops, high bottoms. So higher base is being formed at 390. And with the support, it can again head towards 425, 428 kind of levels.
Okay, that's the view, 428 kind of levels. Keep that on your radar. But let's shift focus to our viewer queries then, quite a few of them, and I would like to get as many addressed as possible. Let's take up this query on a Hind Copper by Satya CK. Wants to know whether it's a good time to make a fresh entry. If not now, what are the levels at which he can accumulate? Looking at Hindustan Copper, it's down in trade, although the metal pack was in the green in the last 5 sessions as well. Hasn't seen any kind of fireworks, but last 1 month has been fairly good for this particular stock, as it has been for the metal basket as well. So Hindustan Copper right now or at a later stage, and at what levels?
So I think buy on decline is advisable in this name. In fact, we have seen a strong run up in the counter in last almost 2 months, rallied well from 228 to 365. However, we have seen some volatile swings because of the volatility in the precious metal like gold and silver. But yes, major trend of counter is positive. In fact, it has been consolidating in a range from last 14 days. But multiple supports are visible near 325, 328. So till it holds about 325, buy on decline can be applied for an upside target towards 360 kind of levels.
Buy and declines, that's the view on a Hindustan Copper. Hope that answers your query. There's a query from Komal Makecha on Bharat Electronics, which we already discussed. But let's take up a query on Bharti Airtel and she holds the stock at 1900. Wants to know whether she should hold on or book profits. So the stock hit a fresh 52-week high today at 2067. She's making a good profit here. But should she hold on for more upside?
Yeah, so Bharti looks good. In fact, this is one of the blue chip counter which slow and steady really done well. In fact, a margin of safety and momentum both were seen in the counter. In fact, in last 6 to 7 years, the stock rallied well from 265 to 2060 plus kind of level. It has been making high tops, high bottom on the daily chart, rallied well from 1850 to 2060 kind of level. Even on the weekly chart, it has given a consolidation breakout. So positive sentiment is clearly visible till it holds about 1990 kind of level. Bharti has potential to rally towards 2150 to 2180 kind of levels.
Okay, 2150 to 2185. That's the kind of level you can expect on a Bharti Airtel going forward. I hope that answers your query. There's a query that's come in from Sri Raksha and it's on a Suzlon. The stock is at 55 almost, up 1%. In fact, last month or so, it has lost somewhere around 7% or so, trying to make a comeback in the last 5 sessions, way off from its 52-week high of 74.3. But any thoughts on Suzlon? Should it be bought, or is it really not worth buying at the current juncture? Your thoughts?
Yeah. Before I comment on Suzlon, the Bank Nifty is hitting to the new lifetime high. Even surpassed the previous high, witnessed buy on decline stance, and now beyond 58, 300 levels. Nifty is again heading towards its intraday high level. However, the lifetime high is still around 200 points away, but the way momentum is visible and declines are being bought, we are quite bullish and expecting market to continue the firecracker even post the Diwali. But yes, to reply on the Suzlon, major trend has been consolidating or correcting from last couple of weeks. It has been making lower top, lower bottom on the weekly chart, corrected from 74 to 52. But yes, near 45, it can again provide some support based buying. So 45 to 65, this is going to be the probable trading range for Suzlon. However, the stock was under pressure if I look at the last couple of years, but in last 2 years, it really do well. So we need to look at buy on decline, but yes, position sizing and limited bounce kind of setup can be applied in this name.
All right, that's the view on Suzlon. I hope that answers your query. Next one then from Pooja Khanna wants to know your thoughts on an NCC, which she holds at 225. Wants to know the view for 3 months. Making a bit of a loss here. and of course the stock hasn't really been able to establish any kind of an uptrend. Thoughts on what she should do with her holding?
Yeah, thank you, Poojaji. So stock has been underperforming. In fact, if I look at the YTD basis, it's down by more than 20%. If you look at the Nifty index, that's up by around, I can say 10%, but NCC is down by around 23%. So underperformance is clearly visible. However, on short-term point of view, it formed the bottom near 200, 202. So you can use that support. If bounce happens, it can head to us 222, 225. Above that only, the stance could be aggressive. But as of now, looking for some range-bound bias with multiple support at 200, 202 kind of levels.
All right, that's the view on NCC. But let's talk about a query on a textile name, Welspun Living. Now there are reports, of course, that the tariff on India could come down from 50% to as low as 15% or so. Of course, these are all reports, and there has been a recent conversation between US President Donald Trump and PM Modi as well. Seems like we are heading in the right direction when it comes to a trade deal, which is why I think we are seeing stocks like Welspun Living, weaving good gains in today's trading session. 6.5% uptick on a Welspun Living. Would you recommend a fresh entry? This query is coming in from Alex.
I think a revised tariff could be a big trigger for such kind of name in the industry. In fact, Welspun Living has formed the multiple bottoms near 110, 114 kind of level. As per the recent price setup, stock is all set to give a consolidation breakout of last 57 trading session. So as of now, with support of 124, it can head towards 142 to 145.
Okay, that's the view. Those are the levels to watch out for. But I think last query then, quickly want to squeeze it in. Coming in from Jitu James, wants your thoughts on Honeywell. I think he's holding it for the last 1 year. Wants to know what he should be doing. Any thoughts? Should he get out, hold on?
So if you look at the Honeywell, it got stuck in a broader range from last couple of years. In fact, if I look at the last 4 years data setup, multiple times it came near 36 to 40,000. So momentum is missing. My suggestion is keep the support near 34,500. If it moves above 37,500, then only the bullish stance could be there. But as of now, expecting some sort of consolidative kind of move in the counter.
Okay, that's about Honeywell. Hope that answers your query, but this wraps up our query segment for today. If you couldn't take up your query, don't worry, keep them coming in. We'll try and get them addressed tomorrow. But with that, Chandan, would like to thank you for taking out time and sharing your thoughts with us as always. Look forward to more conversations in future and wishing you a very, very happy new Samvat going forward.
Thank you so much, Nandita. Have a great time and looking forward for Nifty to hit the new highs. And meanwhile, all set to enjoy the festive vibe and the cricket match as well.
I hope so. I think the first wicket is down as we speak. I think it's 2 wickets down now. So let's hope that we see some kind of fireworks on the cricketing ground as well. Of course, on Dalal Street, there's nothing to complain about. We are above that 26,000 mark, but let's see how things really pan out on the cricket ground. But with that, thank you for joining in. All right, then take a look at the market. Firmly above that 26,000 mark, 200-point uptick on the Nifty as we speak. The Sensex up over 700 points, 85,150. That's where we are at when it comes to Sensex. The mid cap index has also picked up some steam, but it's the large cap or the frontline indices that are calling the shots today. Bank Nifty up a 400 points, 58,400, a fresh record on the Nifty Bank index as we speak. Advanced decline ratio 3:2, so nothing to complain about there as well. In terms of sectors, most of them were trading in the green, but I just want to see what some of these mid-cap names are doing and which are the top movers from the mid-cap end of the markets. Textile names, on reports that there could be a deal coming pretty soon and the final tariff could settle around 15% or so, substantially down from 50%. That's got some of these textile names excited in trade. The likes of Vardhaman Textiles up 7.5%, Welspun Living up almost 6%. You have KPR Mills up 4%. So all these textile names up and about in trade. Some of these mid-cap IT names also doing well. Birla Soft, that's up 7%. You have, other names like Bharat Forge, Shipping Corp, Reliance Power, Sonata Soft, Trident, a lot of these names that are clocking in gains of anywhere between 4 to 15%, 4 to 7% or so. On the losing end from the mid-cap end of the markets, you have the likes of an Ather Energy, that's down 6%. Muthut Finance also down somewhere around 4%. Tata Investment, that was a big mover on Monday, that's down 4% or so. MRPL also down 3%. You also have Whirlpool, NMDC and Hindustan Copper. These are among some of the names that are under pressure. But on that note, let me bring on board our next guest for today. Joining me is Anand K. Rathi, co-founder at MIRA Money. Anand, lovely chatting with you this morning. First of all, would like to wish you a very, happy Diwali, season's greetings. Wishing you a profitable Samvat ahead. And I distinctly remember last time we spoke, you did say that, you are expecting the Nifty to hit all-time highs around October. And, that kind of is coming true now. Just about 200 odd points away from record levels. And, things looking good. Since we had a spate of reforms, you have some thaw, in India, US trade talks as well. Here on, almost knocking at record levels. What are your thoughts on the markets and how it has moved in the last couple of weeks?
Thank you for having me and wish you all and your viewers a very happy Diwali. Yes, the new high is almost near, and now I'm thinking of a number like 30,000. Maybe in the coming year or so. There have been a lot of reforms that have been done by the government, and we really hope that this turns out to be positive for the earnings as well, right? So consumption should pick up, as we can see from early data. But if this turns out to be good, and if it turns out to be that in the corporate earnings pick up, I think 30,000 could be the number that we all should be looking out for in the coming year.
All right, 30,000 on the Nifty in the coming year. That's something that even Atul Suri of Marathon Trends, said in an interview to CNBC TV 18, on Muhurat day trading as well. So yes, that will be the next thing to watch out for. But, in the very near term, do you think a trade deal, with the US, with, the tariff somewhere around 15% or so, is that something that has already been factored in? Or do you think there is more upside just, once the trade deal comes about? Because we were looking at a fall trade deal any which ways, right? So maybe next couple of weeks, we could have some good news on that front. And given the history of, TACO trade, my only thought is this whole tariff thaw already priced in, or because we've seen quite a good move in the last 2-3 weeks? What are your thoughts?
So I was of the belief that Trump has taken off 10% of our Nifty's rally, and if you see in the last 1 month, especially in October, Nifty has rallied close to about 5-6% or so. So if I were to put that number, I think 4-5% rally is still pending, thanks to the tariff news itself, the positive tariff news itself. Plus, if I were to add consumption play, I think we can pretty much see a 4 to 5% rally the moment the news on tariff. Let's say someone is saying 15%, someone is saying maybe less than 25%, whatever is the number. So depending on the number, the market definitely has some legs to go up in the shorter term. And, depending on the earnings, I think the market definitely has more legs to go in the medium term also. So to answer your question, I think, the moment the tariff news is out, I think close to about 4 to 5% rally is expected post that as well.
All right, another leg of rally expected post that. But, how are you looking at where we are in terms of valuations? We have, of course, come off a very muted year of gains, right, for the Indian market. We've underperformed markets like China by a wide margin. So has the catch-up trade just started out?
China continues to be attractive. In my view, they are coming out of deflation, and this is a very good sign for any market in general. If you see Japan in the recent years, if you see US in 2022 and 2020 and stuff like that. So China as a market is definitely attractive. So if I'm an FII, it is not that I'm going to quit China and invest all the money into India. China is cheaper than India, and if the deflation story plays out to be good, I think it can offer better returns than India. So as an FII, I may be more excited about China than India. But this is not to say that India is not attractive. Definitely, the valuations are not as attractive as China. But the underallocation in FII portfolio could well mean that if I see some semblance of earnings coming back, I may start allocating a little more, or rather stop selling my holdings. So this itself can act like a bit of a pause on the downside. It can give you a downside protection. FIIs will look at India, but I think they will be watching out for the commentary of the management that are coming out and giving the results today. And if that is good, I think FIIs can pour in sizable amount of money in the next couple of months.
That's true, and of course, FIIs have pulled out big money from the Indian market this year, but of late, we've seen the sell-off abating and meager amount of buying coming in. Perhaps could signal more buying ahead. But what did you make of the earnings season, the kind of numbers that have come out so far, and the commentary from the management, especially the likes of banks and IT? How have you rated these earnings from these sectors? Of course, IT, a lot of experts are saying that much better than muted expectations. What have you made of these numbers, and what would you do with IT in particular?
So IT is a bit of a contra play. More than anything else, it is not that everything is doomsday for IT. So at a certain price point, IT works out well. And even today, if you actually see IT to touch its all-time high numbers, it still has to grow at about 30% from here. So it's a good contra play. The price at which it is trading is definitely good. Plus, if we see what TCS has done, if you see a lot of other companies, the AI play is also looking like they are also serious about AI as a play. Plus, Infosys also is winning big contracts across the globe. So in my view, it is not all doomsday. It's a good contra play, and I think IT the allocation could be as high as 10% for anyone's portfolio. Coming to banking, I think the NIMs are looking good. Now that the banks are able to pass on the rate cut benefit to the deposits, I think the NIMs are looking even better going forward. And that's one of the reasons why banking as a play and Bank Nifty is making higher and higher levels every day, thanks to PSU banks as well. So in my view, both banks and IT are a good play in anyone's portfolio. And earnings season, I don't see a major earnings, kind of maybe 5 to 6% kind of a growth this time around. But as I said earlier, it's all about the commentary, right? If let's say the CEO of a company comes and says, we are seeing positive year for the second half of the year, I think markets will take that in the stride and start marching forward.
Okay, you said 10% kind of allocation to IT. Which if of course FI buying picks up here on, taking stock of the earnings and the kind of commentary that comes out of management, which is the sector that is poised to see the most, buying by the FI community?
I think banking, because FIs may not really speculate too much on sectors which are undervalued. They would definitely look at places where there are seeing semblance of earnings growth, and banking is clearly coming out and showing positive earnings growth. And maybe a bit of a play can be on auto and consumption as a theme. So I think these are the 2-3 sectors that FIIs or even DIIs may see value. So for example, FMCG has not, is a good 20% or 18% away from its all-time high numbers. So for all you know, if HUL today and let's say the rest of the FMCG companies come and show positive growth, I think that is one place which is looking cheaper. IT is looking cheaper, but as I said, IT has its own headwinds. So FIs may not invest into it. Banking is where FIs can get into big time, definitely followed by FMCG.
Okay, banking followed by FMCG. But talking about consumption, post the GST reforms, would you bet more on the discretionary side or the staple side? Staples and FMCG in particular haven't really fired up. We do see, 2-3 day kind of pop, which happened even when the income tax cuts were announced. Same happened for GST as well, but doesn't seem to really extend. The stocks don't really take it forward. So which end of the spectrum would you be more tilted towards?
See, ideally with rural economy picking up, I should bet more on FMCG. But the issue with FMCG is the valuations. The kind of valuation that a lot of these companies in the sector are trading at is really not worth it. So that's one of the reasons why, while it is prudent for a lot of investors to invest in FMCG, the valuations don't allow or don't show great returns going forward. As a bit of a contra play, you may want to invest a little bit, but I would rather bet more on discretionary or premiumization as a theme, because earlier if the investor was looking at buying a small car, today he's upgrading to an SUV thanks to GST cut and things like that, right? So premiumization is something that I'm going to play as a theme, and discretionary is a better theme than FMCG alone as a play. So no staples or less staples and more discretionary is how one can approach the consumption pack.
Okay, that's the approach to the consumption pocket. But which are the other high conviction ideas from your end at the current juncture? What are you advising your clients to do? If somebody is looking to rotate out of certain sectors and get into certain sectors, which one would feature high on your list?
Capex cycle, people have actually forgotten the yesteryear's rock star, which was Capex. This year, of course, the government itself has been focusing on consumption, but till last year it was Capex. So a lot of us have forgotten manufacturing. A lot of us have forgotten what power and infra could do or will do for the country, and it is an important parameter for us to grow, right? So these are the two sectors that have been out of favor. They have not been getting enough limelight, and that is a place where if someone is patient enough, someone can build a consistent portfolio for the next maybe 6 months to 12 months, invest regularly and build a sizable portfolio in that as a contra theme. And definitely consumption as a play, especially like what I told you earlier. Discretionary consumption is something that we can definitely look at. But this is a time when I think one has to be a little more diversified when it comes to market caps. Large caps were undervalued, now rightly valued, soon will become overvalued. But I think if this same pace at which small caps grow, which is not very high, I think that is one play that can look good in the next couple of quarters. So in my view, manufacturing and power and maybe small caps are a place for the next 6 months to 1 year to slowly accumulate your portfolio into.
Two other spaces I want to speak to you about. One, of course, is that high growth area of quick commerce. At a time when the markets were struggling, some of these names like Swiggy, Zomato made good money, and of course they're now perched at their record highs as well. Numbers have also not been all that bad, but there are still concerns lingering around cash burn as well. How are you approaching some of these, high growth names, the new age ones at this juncture?
Like a VC, let me put it in a very simple way. These are sectors that may not really show growth in the immediate or the near future. And we do have clients in these companies that you mentioned, and whatever little I could understand from them, the festive year has been, or the festive month has been good and great. And they're also looking at various other categories that they are not tapping into at this point in time. So in terms of growth, the high growth will continue. In terms of, the burn, I think the burn will continue as well. So if you're an investor in these companies, don't look at a daily price movement, not even a yearly price movement. See if the company is going the right way, doing the right kind of diversification in businesses, and then approach it like a venture capitalist and invest your money only if you have slightly longer than usual time frame in these kind of companies. Because if it turns out to be good, you will see great returns. But the other downside to it is, once they show profits, the larger players, larger established retail players will come into this also. So that is some kind of a headwind that you will see. So bet carefully and bet for a slightly longer than usual period.
Okay, keep a longer time horizon for some of these names. But what about one pocket that has given super normal returns, the precious metals pack, so to say, gold, silver, on a tear, but of course we've seen a bit of a correction as well. Gold is, I think, over 6% off from its record highs as well. How are you looking at this theme? Have you been advising your clients to increase their allocation to gold or not be, really taken in by the frenzy and, unnecessarily increase too much exposure? How are you looking at gold, and how should one really take exposure to gold at these levels?
So gold and silver pretty much have downside protection, primarily because there's so much buying, especially from the government side. So they may not really see very low prices, especially gold, because that has become a part of their reserve, a lot of countries' reserve currency. So the downside doesn't look good, and so does the upside, because if trade tariff comes through, if Russia-Ukraine war is taken off, so you may not really see major upside also. So gold is right now entering a zone where you may not see, like what you saw in the last couple of years, the greatest of the returns, in my view. While we are not increasing our allocation significantly, plus we are also not asking our investors to invest in lump sum. We definitely, in general, we keep about 5 to 10% of our portfolio in gold, and maybe add a bit of silver there. That is a standard allocation that we want to invest into, and do invest only via SIPs. Because the issue today is gold has, people are entering gold with an assumption that they will make the same kind of return like what they have seen already, which is not going to be the case. So in our view, if you're approaching precious metal, please be very careful and just do a little bit of SIP mode than investing in lump sum at this point in time. It's going to be very volatile. The journey is not going to be the same that we have seen in the past 1 year or so.
All right, that's about gold, downside protected, but not too much upside as well from here. One more theme that I want to discuss is the entire travel and tourism theme. Anything that you like from this end of the spectrum?
With the festive season coming in, with the holiday season also coming in general, there can be a run up in especially the hotels sector. But I think the price at which most of them are trading in is not really very attractive. And most of the good news have already been factored in. So we may not see significant upside on most of the counters at this point in time. Until unless we see new set of reforms, especially that can free up our spending capital, I don't see too much of a boom at this point in time. So whatever run up we have seen is what maybe generally what we should expect, and I don't see things going well and above beyond at this point in time. So not a very favorable sector in terms of valuations. Growth can be good, but valuations are not that very attractive in my view.
And what about some of these recent listings, the likes of Urban Company? We have had a whole host of listings, so to say. Anything that LG Electronics India as well, Tata Capital, we had different companies from different sectors getting listed, and big ones at that. Anything that caught your attention?
While I can't talk stocks, I really like the work that companies that are in the that have formalized the consumption economy is good, like Urban Company and things like that. I strongly believe that they're doing a great job of formalizing both the payment side, both the labor side, and also getting the right set of clienteles for it. So I really like them. LG or Tata Capital, I think, are a general large cap play. One can buy in it, but don't buy it because the prices have run up in 10 days or so. But in general, as I said, if you're approaching any new commerce, which is, like what you mentioned earlier, Swiggy, Zomato, or Urban Company, one definitely needs to have a vision and not just look at immediate return. So that's how you should approach when it comes to new age companies. And old age companies in general are more large cap, mid cap, small cap kind of a play.
All right, that's about it then. I would like to thank you for taking out time, Anand, and joining in. Lovely chatting. And I hope next time we chat, the Nifty would have cleared the all-time high of 26,277 by a wide margin. Look forward to that as well.
Thank you, and have a great year ahead.
Thank you. Same to you. Well, on that note, take a look at what the markets are doing. We are firmly above that 26,000 level. Less than 250 point away from all-time highs. Mid-cap index also, moving well, but underperforming the benchmarks. Bank Nifty hit a fresh record high, currently at 58,450 or so. Advanced decline ratio looking pretty strong, firmly tilted in favor of gainers. We have most of the sectors trading in the green, but of course IT is the one that's taking the lead. Infosys up almost 4%, HCL Tech close second, up almost 3%. Some private banking names like Kotak Mahindra Bank and Axis Bank also dominating the gainers list, and some of these NBFCs like Shriram Finance, Bajaj Finance also trading in the green. So yes, in fine fettle the markets. We'll leave you now. Of course, we'll be back with closing bell at 3 o'clock, so don't forget to tune in then. But hope to see another pop, and as we move forward, let's see whether or not the Nifty can come closer to that record levels of 26,277 or not. With that, completely timed out from me and the entire team. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates. Thank you.